Welcome, everybody, to another Friday. We have someone that I always enjoyed listening to, Drew Polish. Drew is the sales executive in charge of the Fenyx Group MSA, and he's a fireball, and I really enjoy the way that he conceives of situations and everything. We've asked him here to talk to you guys about this product that I think is a really important product for all of us. And I just want to give you a quick reason why I think it's so important. Most of you probably know that individual leads for Medicare are declining. They're evaporating as people who are aging in continue to work and continue to pay attention to the HR department rather than to the direct mail pieces or the television advertising or whatever it is that goes along. And so we now have here a genuine group Medicare product that you can offer to companies that will allow their employees to sign up for it. The company has to sign up for it. It doesn't cost them anything. And Drew is going to talk to us about some of the other carrier responses. He's going to talk to us about sole proprietorship and what I think is really a cool aspect of it. He's probably going to talk to us about how Fenyx has actually diminished the risk that the providers, the doctors, and the hospitals feel when people have an MSA. And I think it's a really sterling product. So, Drew, take it away.
Yeah, and thanks for reminding me on the provider one. Let me make sure I get this open for you too, so we'll have it. Okay, so no, appreciate that. And guys, this can be more of a conversation too. I want to go through and do high level. It may be a little fast at first, just as a refresher. But then what I want to do is mostly hopefully give you ideas. To Doug's point, I really appreciate him bringing that up. People are turning to their employers more and more for all kinds of advice. I mean, you think of EAP benefits, right? For mental nervous, for financial wellness, the wellness plans, and HR people are experts in their area. What we've found is, one, they're not, nor do they want to be experts in Medicare, and they want to be very careful on how they talk to people about that. So having a resource to send them to is just such a great fit, and we just fill that gap and allow you to be right on side. So Drew Polish, Fenyx Health, we offer a group Medicare MSA, so medical savings account. So if you think HSA, but with some differences, we'll talk about that. The four ways to qualify for Medicare typically, right? And you guys can read, we'll get you slides and stuff. We don't have to go through every bullet point. The 4 ways to qualify for Medicare, typically you've got a supplement or a Medicare Advantage plan to choose from, pros and cons on both, flexibility on the supplement, they're getting more expensive. Advantage plans give you all the extras. In a lot of cases, they can be 0 premium. Sometimes that's changing, but managed networks, etc. We're now offering the Medicare Advantage MSA, which is an MA only, meaning it does not include prescription drugs. You do buy that separately. It is a 0 premium by law, so we're not changing that. You still have to pay for your Medicare Part B and Part D, of course, but we're unique. MSAs are unique. We have a contract with CMS, with Medicare, and so we actually get access to their network. So we're available in all 50 states on a group chassis. So you have access to any Medicare provider in the entire country. They just have to be willing to bill us. And then I'll talk about that provider piece like Doug mentioned. Think HSA for a minute. You actually get an annual deposit from the government. It has to go through us because you can't put money in the MSA. We have to. We're the insurance company and the bank. We cover all Medicare A and B expenses. So if Medicare covers it, we cover it. It's pretty simple. And this is the other unique feature is there's no prior authorizations or referrals unless Medicare requires it. So literally think original Medicare, but it's kind of this hybrid supplement Medicare Advantage. And so I'll be the first ones to tell you it's not the right product for everyone. Okay. But for every group, they should offer it. I just did a presentation with a really large organization back east. And I started my statement with, think of it this way. Every company, every single employer group in the great country of the United States of America can and should offer a Medicare retiree benefit, and they can do that through us now because there's no cost. I mean, literally every employer group. I was just down in Salt Lake the other day. I had to go down to almost to Provo, so it was a long drive. And I just look at everywhere you drive. I mean, it doesn't matter if it's Maverick, if it's Shields, you know, if it's these huge companies, if it's mom and, you know, the pop shop, Swig, whatever it is down there, every single company literally can offer our product. There's just nothing like it in the entire country. We're the only ones that have it right now. It's just so amazing and fun. Like I said, we're in all 50 states. We're licensed in the state of Texas, but on a group Medicare chassis, we get the federal waiver. So we're approved in all 50 states plus DC. Like Doug pointed out, on a group chassis, we don't have to follow the same marketing guidelines. So once a group offers our product, you as the agent of record can then get, if they're willing to share with you, you know, their employee list, their former employee list, doesn't matter how long ago they worked for them, you can now go back to those people and say, hey, your employer is offering a Medicare retiree benefit at no cost, and you get in front of them. Now, whether the MSA is the right fit or not, you know, that's where you're a good agent. You're going to do what's right for the client. You know, I tell people 2 things have to happen in order to help someone do the right thing. 1, you need to meet with them. And 2, you need enough available products because every situation's different. So here I am, the chief sales officer of Fenyx Health, and I do realize this is recorded, so if Jim hears it, but he knows because I tell him, it's not the right fit for everyone, and that's okay. Your job is to help people with what's in their best interest. We want to make it available. Just like HSAs have become pretty common in the commercial market as an option, we want to give every Medicare beneficiary the MSA option so that when it's the right fit, we've now empowered you, the broker, and the beneficiary to have it as an option. Pretty cool. You know, if you're self-employed, we have, or if you only have Medicare, right, your Medicare's primary, we've got a sole proprietor plan we're going to talk about. If you're a small group, 2 to 19, you don't follow the Medicare secondary payer rules. They don't apply to you. So we actually have a small group strategy where we can remove people off your small group and put them on our plan. And you as the employer can help fund it, which is really cool. We can add money through a group fee. If you're a large employer, then you're supposed to follow the Medicare secondary payer rules if you have more than 20 employees. And those rules are pretty simple. The employer cannot offer financial or other benefits or incentives to entice a worker to leave the group health insurance, right? Because their group is primary. Now, you as the health broker, the Medicare broker, when we're attached to a company, you get to educate them. That's what it's really about, right? And the HR person is going to love you. You're going to be one of their best friends on speed dial, because every time someone comes in and says, oh, yeah, I'm getting all this stuff in the mail about Medicare, and whether or not they're looking at retiring, they just have questions. You are now able to go in and educate those people and actually say, your employer offers you a benefit. If it's the right fit, you can leave the group, or you can wait till you retire, or it's available for spouses and dependents. These are our 3 standard plans. We have the MSA 100, 200, and 300 right now. The deductible, again, think HSA for a minute, high deductible, which you, the beneficiary, is responsible for. This deposit money comes from Medicare. So we get paid just like SelectTel, just like United, just like Anthem, Humana. We're Medicare Advantage plan. When someone enrolls in our plan, we get paid from Medicare every month. But what's unique is Medicare actually gives us this money up front. This is assuming you sign up in January. These are the full amounts. So if you sign up on the MSA 200, you have a $6,000 deductible. We give you $2,400 from Medicare in an MSA account. Right now, our bank is Optum Bank. For those of you that were familiar with Lasso Healthcare, same bank they use. That money is meant to offset your deductible. If you don't end up, so if you did use it all for your deductible, it leaves you with $3,600 left. That's your effective max out of pocket, pretty low max out of pocket. compared to some other Medicare Advantage plans. If you don't spend the money, what's really cool is it rolls over. You never lose it. And the next year you get another deposit, or you can spend it on any qualified medical expense without tax consequence. So it's just giving you value that it literally is the only Medicare product that you can earn money on. And then of course there's different flavors of what you want. So that's the gist of our plan. So when a group signs up, all three of these plans are available. There's no participation requirements. Doesn't matter how long ago someone worked for you, if they were part-time, full-time, even 1099, right? You guys have a lot of multi-level marketing companies down in Utah. Think of all their employees plus their distribution partners, or I can't remember what all they call the names, literally would qualify, give them an option, right? We just want to give people access to more options. What's really fun is we have the ability to white label our product. We realize that nobody knows, well, people do know now, but not very many people know about Fenyx Health. We are a newer carrier, right? So we're able to white label our product with brand partners. So we just announced a few weeks ago when I was at the NABIP annual convention in Miami, we made the press release that Select Health has actually signed a contract with us to offer our product as a white label. So effective July 1st, we're a little behind on some of their stuff because we're waiting. So it'll mostly be August 1st effective dates now. You can now offer the Select Health Group MSA. And it is, powered by Fenyx here. They actually wanted us to put that on there. So we've created these flyers. These are still in draft mode. We've got a few things at Select Health. So that's my caveat here. We won't send these to you right away, but they should be here shortly. Select Health just has to finalize a few things, but we've got flyers for the group broker. We have flyers for the individual, sole proprietor, for the HR person, right? For the employee of the company. And they just look in a way that you can put your information on here. They'll all be fillable. So you can add your information if you need to change the QR code, whatnot, but just kind of explains, look, this is no cost to the group. Because there's no cost, it's not subject to ERISA. You don't report this on a 5,500. It doesn't matter if you have 1, 10, 10,000, 100,000 employees, doesn't matter. Everyone can and should offer it. We're in all 50 states, year-round enrollment, right? We're a group product. You can enroll any month of the year once the group offers it. Here's some of the highlights. Here's our 3 standard plans. Oh, and by the way, we can now educate your people and give them an additional option. It's just so fun. This one's, specifically for the broker. This one is for the small group, right? So this is our small group strategy. If you have less than 20 employees, you can force your people off your group health insurance. Sometimes the agents don't quite understand that. Medicare's primary, you can kick them off your group health. And we have a way that the employer can put more money into the product for you. So we literally have a $6,000 deductible. Think of our MSA 200 plan. We give you $2,400 up front. The group pays us $600 a month. We add $400 to your account every month. So at the end of the year, you have $7,200 in your MSA account funded from Medicare and your employer, and you only have a $6,000 deductible. You have $1,200 more than your deductible. And the employer funded it all. They took you off your group health plan. If you're a small employer, they save money. We can just do some fun stuff. When we shared this with Select Health, that was one thing that caught their eye, was on all their small groups under 20 that have Medicare eligible. It's like, well, if we can pull those people off, that may be helpful, right? So just fun. This is our sole proprietor plan that we currently have. This one, it's $250 a month. And I'll show you some other slides that break it out. Remember, by law, we can't charge you a premium, right? But on a group chassis, we can charge the group a fee. So you can be a group of one. So this is where we can do some fun stuff that has never been done before. So if you're a sole proprietor or self-employed person, right, we charge you $250 a month. $200 goes right back into your bank account every month. So we give you the $2,400 that Medicare gives us. Every month you give us $250, we give you back $200. So you have a total of $4,800 in your account at the end of the year. We lowered the deductible to $5,000. You're only at risk $200. Pretty cool. And oh, by the way, this started April 1st, and of course Select Health will have their brand coming out soon. You can sell it any month of the year. It's just pretty cool. And then we've got some other flyers that this kind of shows all three strategies at once. So our sole proprietor plan, right? Here's the fee, deductible, deposit. Here's our small group strategy, and then here's our standard plans. Like I said, all of these will be available here shortly. Of course, we'll get those all to Stonehill. They can distribute them out. This is the group, or sorry, this is the provider piece Doug was talking about. Every member gets one of these. Of course, you can have a copy. It explains to the doctor, the hospital, look, we're like original Medicare. There's no prior auths, there's no referrals, unless Medicare is requiring it. There's no contract, and we pay you 100% of Medicare. So you are responsible for your deductible, but what we've actually done is we actually front the money to the doctor and the hospital. So it doesn't matter what plan you choose. If you go in and have a bill, Medicare reprices it, Milliman reprices it for us. We pay the doctor and the hospital 100% of the Medicare allowed below the deductible, and above the deductible is our responsibility. Then we go back to the member and say, hey, Doug, you went to the hospital, you have a $6,000 deductible, it was $1,200, we already paid that. How would you like to pay us back? You have money in your MSA, we can take that money. Would you like to pay us with an HSA, with a card? So we've done that so the providers have a good experience, right? So that they get paid right away. They don't even have to bill the patient. Is it perfect? No. You know, most hospitals, when they know how they're getting paid and they're getting paid 100% of Medicare, they're like, wow, we've never seen a Medicare Advantage plan like this, right? Renown Hospital in Reno, full disclosure, right? They have not been nice, right? And they refuse to take anyone except for their own product, which I think is a huge conflict. Medicare subsidizing them. They refuse all other Medicare Advantage plans, but that's a different political deal. So we just have to understand. But University of Utah has been wonderful to work with. Intermountain Healthcare, of course, now we're with Select Health. They've agreed to go to all their providers and say, hey, this is how this works, right? St. Luke's in Idaho works great. The Mayo Clinic, which is known for not accepting Medicare Advantage plans, they accept the MSA because they get paid 100% of Medicare. So you've got some flexibility there. Of course, the Select Health brand is important to us. I just met with the Children's Miracle Network yesterday, and they want to sign up, and they were excited to I mean, they would have signed up under Fenyx too, but we let them know that we now have a signed contract with Select Health and they can use that brand. And they said, yeah, that'd be wonderful. So some fun stuff that we're doing. Let me pause there before I go. I do have a spreadsheet I want to go through and talk about some other sole proprietor plans that are coming. But let me pause there, and what questions do you have for me?
Nothing in the written section yet.
Okay, maybe that was just a pause for me to get a drink. So thank you. All right, you want me to continue here?
Please.
So if I switch my screen, does that switch it on the deal or no?
It depends on how you chose. Is it a different tab?
Hold on. It is. Hold on. It is. So I remembered I switched to the tab. So let me go back here and switch tabs. There we go.
Yeah, we see that.
All right. So this is a calculator, and we can send this to you guys. It's just Excel. It's nothing fancy, but this shows our small group strategy, where you can literally be in front of a small group, the business owner, the office manager, and in real time, you can say how much what's your current deductible deposit? How much are you paying? What's the split? Here's what the MSA looks like. Here's what your current group's paying. Here's how much you can save, etc. It's kind of fun. And so like, for example, I grew up in Elko, Nevada. So if I meet with a group in Elko and this is their deductible and deposit, Elko's a lot more expensive. It's $1,800 a month for someone who's Medicare eligible. They pay 100% for their employee because they're trying to compete with Nevada Gold. And I'm like, hey, look, let's move Johnny off your plan that has an $8,000 max out of pocket. You're paying $1,800 a month. Let's move him to our Phoenix Health MSA option or Select Health, because they're in Idaho, Utah, Nevada, and Colorado. They rolled it out in all 4 states. And it's only going to cost you $600. Johnny's going to be able to earn more money. He's got to pay some for his part B, but you get to save the money moving Johnny from the group. So some fun stuff that we can do there, and we can help you go through this. We can help you with the meeting, whatnot. This is our sole proprietor plan. Oh, go ahead.
Just the employer current plan is the current non-Phoenix employer plan.
It's the current commercial health plan. Yes.
Yeah.
It's their commercial health plan, because, you know, although a small group could force their people off their commercial plan, you know, sometimes, you know, they care for their people. They don't always do that. So if they've got someone who's still working, that's Medicare eligible and still on their company plan, then that's where we want to have that conversation. So, and then they should offer our standard plans regardless, right? Because there's no cost there. It's for everyone. You should do it anyways. So, this is our current sole proprietor plan, right? $250 group fee. We lowered the deductible a little bit. You get the accumulation of $4,800. This is how it looks, you know, per month if you start in January. So this is available right now, and you don't even have to have an EIN number to apply. You just have to agree. You have to self-attest that you're a sole proprietor according to the definition of the IRS, which is basically, you know, are you, you know, engaged in an activity for income or profit, and you do that with regularity and some continuity. So not a huge hard definition to hurdle, but we do reserve the right to get your tax return from you and see if you have a Schedule C, E, F, whatever it may be, to just verify.
How does
Starting
the prorated that?
So everything's prorated. So the deductible and the deposit, so like the MSA 200, right? It's $200 less per. I actually think I have. Let me see if I have that in my. Oh, perfect! I do. I wasn't sure if I would have it, but I do in that other presentation. So the proration, you guys can see that now.
Yes.
Yeah. So depending on which plan you buy, so the MSA 200, think of it as you get the money in advance, but it's really vested $200 a month at a time. Because if you left the group early, or like we just had our first client pass away, you know, so they've got to pay back some money out of their MSA. So if you signed up in July, you'd have a $1,200 deductible, $4,800. This would be, you still keep the max out of pocket effectively all the time. Now it's a little different on our sole proprietor plan, right? Because you're not going to get the $2,400 is reduced by $200 every single month. So if I go back, sorry, I know that I got it. You guys will have to teach me how to do this better, so I don't have to keep switching screens. But if I go back to our spreadsheet here.
Sorry, Drew, I have a question again to that group, small group.
Yep.
If you have, so what we're talking about is you have a certain amount of people over 65 or Medicare eligible in that group, and another amount of personnel you have under 65 in their regular insurance plan. And if certain people want to get off that because they're over 65, that could change the allocation or the pricing of that remaining group left. So if 2 or 3 are over 65 and still working, let's say there are even principals in that small employer, what happens to the 2 plans then?
Yeah, so for example, on the group plan, right? So this is an actual group that I use the numbers from. It's with Regents Blue Shield up in Idaho. And so they've got the $3,250 deductible, $8,000 max out of pocket. This is what they're currently paying for that member who's over 65 that's eligible for Medicare, right? And they're on Part A.
Mm-hmm.
And here's the split. So the employer's paying $960, the employee's paying $240. And what we told the employers, we said, look, if you'll implement our small group strategy, we're going to move that employee, we're going to call him Johnny, we're we're going to move him to our Fenyx Health product where it's only going to cost you, Mr. and Mrs. Employer, $600. Okay. Johnny's going to have to sign up for Part B and Part D, which happens to be $240 for him because we estimated Part D, $55. But what's going to happen is Johnny now goes to a $6,000 deductible with $7,200 worth of deposits. That's better than his $8,000 max out of pocket right now. The employer saved money. Johnny's about paying the same because he had to sign up for Part B and Part D, but now he has the ability to earn $7,200. And then to your point, the other thing we see from the small group is your group rate can go down, right? For the entire group. So right now that group's paying $125,000 for their 17 members plus spouses and dependents, right? So if we take Johnny off the group, especially if it's a level funded, right? And we can save 5% more premium. The group saved $4,300 because they went from $960 to $600, right? That was savings right away. If they save 5% on their group renewal, that's another $6,000. The group's saving money. So we're removing that risk from the group, right?
So, and
Johnny's
what happens to the spouse of that older employee?
Oh, yes. Thank you. So it depends, right? So if the spouse is older and on Medicare, they've usually left the group anyways, because if the group's not contributing, if the spouse is younger,
she's still
than
on the
spouse
in a very practical situation. She's still through the spouse insured on the group plan, but it's over 65.
Yes. Yeah. So in that case, if the spouse is with, they would be kicked off the group, right? Because the primary is no longer eligible.
Mm-hmm.
They would be kicked off the groups. Now that gives them a qualified life event, so they can go to the marketplace and get an individual policy. Or that may be a conversation you have with the employer, and you say, look, if we kick Johnny off, his spouse is not going to be able to be on the insurance, and maybe that's not the best move. So even though it's more expensive on the group plan, maybe the employer says, no, we don't want to do that to Johnny, right? This is just the conversation you need to have with the employer group. They don't have to be nice about it, by the way. The employer has the right to kick them off. Doesn't matter what their spouse's situation is. They can say, Johnny, you're Medicare eligible. We don't have to offer you benefits anymore. Here's a plan for you, or they can help them with something else. But you want to take care of your people. So just an option.
So Drew, if I understand that correctly, so if I have employees or one employee that still continues working and is currently under the group plan, but is Medicare eligible, and we're looking at the Fenyx Health plan, to take that one or two persons of the plan, the group health plan, then the spouses have to get, and the spouses are over 65. So let's clear this up real quick. Then the spouses have to get their own individual Medicare plan.
Oh yeah,
They're
yeah.
not
Sorry, yeah.
Join into this person getting the Fenyx Health plan because it's still an individual plan on the Medicare.
Yeah, correct. Correct. Now the spouse can sign up for our standard plan, right? That we showed you earlier, because it'll be available to the group, right? They just won't get the extra monies because the employer is not contributing. So this is only for actively working people that the employer is contributing to. Otherwise, it's just our standard plans, and then everyone has access to it, spouse, dependent, as long as they're Medicare eligible. Yep. So if they're over 65, you now have a new Medicare option. If they're under 65, they would have to go to an individual policy.
Yeah.
Make sense?
Thanks.
Wonderful. So yeah, on our sole proprietor plan, yeah, so it's going to be prorated, right? So if you signed up in August, right, instead of getting $2,400, you're going to get $1,000, right? Because it's prorated down, and then you would add your monies to it. So to get the full contribution, of course, is for a January renewal, because that's when Medicare pays us that full amount. What's cool about the sole proprietor self-employed plan is we can go to CMS and we can get approval for different amounts. We've already had, think of your high income earners, right? Think of your high paid physicians, attorneys, accountants, executives, salespeople, the ones that like HSAs, and now they're on Medicare and they can't contribute to their HSA anymore. This is the HSA like of Medicare. And so we've already had some that said, geez, could I put more than $250 in? Like, I'd like to put more money in this, right? Because I get all the tax benefits. Because think of that for a minute. For $250 a month, you get 200 back, 2,400 of your own money, 2,400 of the government's money in the most tax efficient vehicle known to man. The HSA of Medicare, right? Goes in pre-tax, grows tax-free, and as long as you use it for qualified medical expenses, come out tax-free. So what we did is we went out and we submitted for January 1st of 2026 some new plans to CMS, and we weren't sure what they would approve, but we thought we would shoot high. So our next plan, we're calling it the Plus plan. It's actually a $550 monthly fee, of which you get 500 back every month, right? So you still get the 2,400 base, then you get 400 back in January. That's why the 2,900, then or 500 back, 500 every month. So deductible is 8,400, deposit's 8,400, right? And we're kind of sharing some risk there with you. Then we've got the growth plan. It's $850 a month. These will all be available January 1st of 2026. 12,000 deductible, but you get 12,000 in deposits. And then I wasn't sure if this last one, Jim was a little wondering if they would approve it, and I told him we needed to submit it just in case. But we have our max plan, and it's kind of fun. $1,850 a month. The max deductible we can charge someone right now on an MSA is $16,000, but we're giving you $24,000 worth of deposits, so you're ahead $8,000. Now let's just talk through the math here, because some people are like, why would I do that? Why would I pay $1,850 a month? You know, I'm getting $1,800 back into the most tax efficient vehicle known to man, but I got this $16,000 deductible. Well, think of your high net worth individuals, or not even high net worth, high paid. Anyone that's making more than $750,000, it's paying the highest IRMA, right? So you're paying $500-600 for your Part B. You're paying over $100 for your Part D, right? They're getting hammered on that. Here's the idea. You put your money in your MSA, you're not allowed to pay your Part B or your Part D premiums with MSA dollars, but once a year, the MSA rules, which fall under Archer MSAs, Medicare Medical Savings Account, or is a subset of Archer MSA rules, allows you to move your money from an MSA to an HSA. Well, why is this important? Well, guess what? You're going to put in $1,850 a month, Mr. or Mrs. Client, of which is pre-tax. So if you're in the highest income bracket, you're already saving $8,000 in taxes there, right? The $24,000 that you accumulate, it grows tax-free. You get to invest it. Once a year, you can move the money from your MSA to your HSA. Why would you want to do that, Drew? Because then you can reimburse yourself for your Part B and Part D premiums with pre-tax money. But think of it for a minute. If you're high income earner, a husband and wife can each do this. If they're self-employed, sole proprietor, you can get $48,000 into the most tax efficient vehicle known to man, the HSA of Medicare. Do this for 3 or 4 or 5 years, 10 years, whatever you want, and then change plans if you want a lower plan. There's just nothing else like this in the market. No one else has it. Of course, this shows Fenyx Health, but we're going to have this option as Select Health branded as well. Pretty cool. I met with a group yesterday, 2 days ago. Days are getting blurry. And they were like, oh my gosh, I need to get this in front of our tax attorneys, our CPAs, our high net worth people, like, because it's all about tax benefits, right? For them, they're not worried about a higher deductible, and it's not even really that high of a deductible when you factor in the tax benefits, right? The ability to move money back to your HSA, reimburse yourself for your Part B and Part D, because if you had an HSA, you can't contribute to it anymore. So there's just so many fun things that we can do.
So Drew, can a sole proprietor, let's say he's 65, he's gotten into an MSA, can he enroll, even though he's got Medicare Part A and B, can he enroll in an HSA that he transfers money to, or does he need to have established the HSA before he got into Medicare?
You know, I should know that question off the top of my head, and I'm not sure what the rules are on establishing it. I don't see why they couldn't. They just can't contribute. normally because of Medicare, but with the MSA, they can transfer it. So most individuals that are interested in the MSA, right, they've had an HSA before, which you guys are in the HSA capital of the world. By the way, we've met with Health Equity several times, and maybe with Select Health now fully on board, we can continue that conversation, because we'd love to have them be the banking partner, right? It'd be the Health Equity debit card, and Optum works great too, but give people more options. So I'll follow up on that one to confirm. But yeah, most people that we've been working with, they like this because they had the HSA. In a lot of cases, they have a bunch of money in their HSA, right? We have a gal down in Nevada, and she's got, I think she had $65,000 in her HSA. She was able to just keep saving it, and it's been healthy. And she just signed up for our plan, and she's like, wow. She's like, literally, I don't think I'll ever have to pay for my medical costs again for my entire life. Between her HSA and the MSA, the contributions and the growth, and her max out of pocket, and now with Part D having a $2,000 max out of pocket, she's like, I don't think I'm ever going to have to pay for my medical again, which is just cool.
Yeah.
So I go back to this deal with the market talking about this, right? And because the market is talking about this and the market is responding, it's like I tell people with Select Health, I wasn't sure when Select Health, when we were first visiting with them, and by the way, one of my favorite companies to work with anyways, and they've moved pretty fast. You guys know how big they are. I thought for a minute, well, when they said they're very interested, maybe they're going to say, well, let's try this in Idaho, and maybe we'll try it in this market, and because of all the changes going on. And at the end of the day, they came out, they said, we want this launched in all 4 states, every zip code, every market, where they're committed to fully integrate Intermountain Healthcare. So Select Health themselves, Intermountain Healthcare themselves is going to sign up for our product. So anyone who's ever worked for them has access to it. It's just telling us that we've got something that we love to just get out there and give people the option, not because we think they should be signed up for it, but when it's the right fit, we want to give them access to it. So that's mostly everything I have as far as showing you presentations. Would love to go through questions. I guess the other thing I would mention, Doug, going back to people, right? This is where this has been powerful. Some agents are like, well, I don't do group insurance, or I don't. Remember, what are you trying to do every day? You're trying to get in front of qualified leads. And when you get in front of that company, and maybe it's through a group broker partnership or whatever, because they want to partner with a Medicare person, you get the leads and you get to go back. So, we signed up a company in Washington. They have 8,000 employees. Well, I'll tell you who they are. It's Expedia Group, right? Everyone knows who Expedia Group is. What a fun company for us to be working with now. They've got hundreds of Medicare active members. We can't force them off the plan, but now we get to educate them. They want us to come on site, be part of their benefits package. The HR gal's really excited, but they committed, you guys. Think of that for a minute, okay? The agent that's now hooked to that group, every person that retires from that group or that's getting close or has Medicare questions, they get the lead, right? But then they also committed to go back 5 years and run a list of every employee that worked for them for the last 5 years, 60 and older. And the agent gets to proactively outreach to them on their behalf and say something like, and we'll coordinate with them and do up the email or the flyer that says something like, Doug, thank you for all your years, helping Expedia become what it is today. We're excited to announce we're now able to offer you a Medicare retiree benefit at no cost. Please call such and such agency to find out more. And then it's just up to the individual. And you get the lead. And if the MSA is not the right fit, then you're going to do what a good agent does, and you're going to help them with what's in their best interest. So you get the lead no matter what. So just super fun. We figure starting out, we figure 20 to 30% of people will say, hey, I think that MSA is kind of cool. I had an HSA, etc. And I had an agent in Wyoming tell me the other day, they're like, yeah, but Drew, but 20 or 30%, like that seems kind of low. And I said, no. That's just who's interested in the MSA. Listen to what you get. You get 100% of all the leads. If you get 1,000 leads from a company, you get 1,000 leads. If only 200 of them sign up on the MSA, you still got to meet with 800 people and help them, right? And you're not going to win them all. You can't, but it's the most powerful marketing opportunity that I think we're coming across. So how can we help?
Yeah.
We love it. I wake up smiling every day.
This is an amazing thing. It really is.
Oh, I'll show you. Can I show you? Because so the way you sign a group up, right? So, and Stonehill will help get you contracted. You know, if they've sent you the link, go back. It's not hard. You just have to get product certified. It's 20 questions. You get 3 times to pass it. Let us know if there's some questions you're struggling with. This is our homepage. You can go right to it to sign up a group, right? It's a little form. Literally takes, I did it online, like with the group. You know, it takes 5 to 7 minutes, super easy. And then anyone who's ever worked for them now has access to it, and you'll get your own link that you don't have to fill out your broker information, but it's pretty easy. And then I'll send you, Doug, Nancy, we now have the link, and I'll send it to you in an email. And this is live for the Select Health Group MSA. So same format. And so any group that you come across, I figure most companies in Utah, Idaho, especially Southern Nevada, but even, you know, Northeastern Nevada, they're going to want, they know who Select Health is. And you can still choose Fenyx. EMI, we have EMI Health white labeled us actually before Select Health. So if you have a group that has EMI, we can have the EMI group MSA. So the market's responding very positively, but this is so exciting for us. We're super excited to get rolling with this right away. But yep, what questions? How can we help you?
Man, I just got to digest this. We're recording this, everyone, and we're going to take a couple of days to edit it, but then we'll post it out on the Stonehill National YouTube channel so that you can review it again. I'm going to review it again. I thought I knew this stuff. I was expecting to just sort of coast through this presentation, and Drew, like every time, just blew my socks off with new stuff. There's a lot of opportunity here. Drew, thank you very much for coming and talking to us. And I think
there's a couple questions here. Let me see if I can catch those. They popped up and then they went. One was, what pushback are you experiencing? So from a group perspective, there's no downside for the group, right? I mean, most groups, when we meet with them, literally they say, well, this is a no-brainer. Like, why wouldn't we give people this option? So some of the pushback has been mostly from the individual providers that don't recognize us, right? So the Select Health brand, of course, will help in getting out in front of their provider teams and whatnot, doing that. So that's been the main pushback is when a member goes somewhere that doesn't recognize it. And if you tell us where you're going, we try to proactively outreach to educate them. You know, 95% of the time, like it usually just works. Even St. Luke's, and like we had people going there for 6 months before one of the specialty offices was like, wait a second, we don't recognize this. And then we called them and explained how they get paid, and they said, okay, great. So, you know, it's like anything. There's limitations in the product. It's not the right fit for everyone. If you're on Medicaid, you're not allowed to sign up. If you're on hospice, you're not allowed to sign up. If you have access to the VA and you're a veteran, you'd have to waive the veteran benefits. So there are some people that can't even sign up, but there's no network. So you can go to any provider that accepts Medicare, but they have to bill us, right? Because we're Medicare Advantage, but they get paid 100% of Medicare. They don't even bill the patient. There's just nothing like it right now. And there's no enrollment season. Self-employed, you just mentioned agents. I think our sole proprietor plan, I think one of the biggest places we could do it is agents themselves, right? We see a lot of agents that are like, man, this is the product I'm going to have when I'm on Medicare. And we're a newer company, like, you know, let's be real. There's times where we got to fix this or fix that, but you communicate to us and we want to do the best we can. So limitations, but exciting. Yeah, but yeah, I just the other day, I met with an agency and the owner is turning 65 next year, and he told his son to stop talking to him about supplements because he's going to enroll in our sole proprietor plan. And he's of course he's like, I'm going to go for that max plan. I'm going to get $24,000 in my account. That's amazing. Pretty cool.
Who do we reach out to for additional information and marketing materials?
Yep. Stonehill will have, you know, get certified. You got to get certified, and then you'll get your ready to sell email, which will come with stuff. And then as we have new stuff coming out, what was that last question? Is it an MA? Oh, here, that's all right. As an MA plan, how does this interact with enrollment periods? Because we're on a group chassis, it's group sponsored, right? But it's the individual voluntarily enrolling. So once a group sponsors our product, you can sign up any month of the year, but we still do follow the trial right periods. So if you've never been on Medicare Advantage before and you enroll in our product, you have 12 months to move to a supplement right without medical underwriting. Otherwise, every AEP, you could move to any other product. So for us, you can sign up any month of the year, or during AEP, you could move to any other Medicare Advantage plan.
Who explains all of this to our clients?
To your clients, that would be the Medicare agent that's helping them understand it.
Okay, because I'm a group guy. I'm not a
Yeah.
Medicare. I actually have a Medicare guy that does all of my supplements and things like that. But so I would need somebody to explain all of this.
We can
Group client. Does that?
we can help you with that. We can help you with that, Mark.
Okay.
Yeah, really the idea, Mark, is what we're finding with the group brokers is that's the lane you want to stay in, right? You get the benefit of going to your groups and saying, hey, we can now offer you this additional benefit. So it makes you a little stickier, gives the group a benefit. And then you've got the Medicare experts that can come in and help with all things Medicare. Because again, our product's not the right fit for everyone, but they're going to help with whatever Medicare product is. And then you've handed that off and you get the win.
Does Jamie Whitlock ring a bell to you guys?
No.
He's a
No.
Utah guy and really good with Medicare. So I was just wondering, is he somebody I can introduce this to?
Sure.
Yeah.
Yep.
Sure.
And Doug, you're with Stonehill?
I am. Yes.
Okay. We talked, I think, one time a year and a half ago. You know, the Stonehill now rings a bell to me.
Okay.
And
And
I'm
we
Henderson.
talked yesterday too. So
Pardon me?
we talked yesterday too. So
Oh, okay. Okay. There you go.
And then yes, Gene, Part D is standalone. So that is another unique feature with us. We are MA only, but you offer a standalone Part D. Correct. Yep.
If someone's currently enrolled in an MAPD,
Yep.
Can they move mid-year over to this?
Yes. And what happens is, because we're Medicare Advantage, when we send the application to CMS, well, two things. One thing has to happen before we do that. We have to enroll, we have to set up the bank account before we can send everything to CMS. So we typically ask for a 5-day lead time. So if you're signing someone up July 31st, we can't guarantee an August 1st effective date because CMS won't allow us to confirm the enrollment till the bank's set up. So you got to give yourself a little bit of leeway there. But once it's approved and we send it to CMS, because it's Medicare Advantage, CMS will kick them off their MAPD, and that's loss of creditable coverage. Then you can go and sign up for an individual PDP.
Okay.
Or if they're moving during annual enrollment period for July 1st, of course you've got the option to do Part D. Or if they're on a supplement, which we do have people that are like, man, if I'm on a supplement, I'm already paying for my Part D, or maybe you're not. But you can just switch because your Part D is not affected.
So is there a rule there at CMS that says if someone is on an individual Medicare Advantage plan and then a group Medicare Advantage plan comes in, we give priority or precedence to the group plan over the individual plan? I mean, is that?
Yeah, so this is where it's kind of that the group chassis, right? And we're filed as a group, but it's the individual enrollment because it's voluntary. So Medicare sees it coming in, they approve it because on a group chassis they can sign up any month of the year. You can't be on more than one plan. So Medicare will force you off the MAPD. That's your creditable coverage, loss of creditable coverage.
So there is that is a precedence. Okay.
Yeah. But it doesn't work the other way as far as if you drop our plan, you can't just create your own special enrollment period because it would have to be a true group AGWIP plan to do that, right? So if you're a retiree group and there's 100 of you and you're all on the same plan and we cancel the plan, then that would be a guaranteed issue situation.
Okay.
So think of it as the group sponsors it, individual voluntarily enrolls, but we still follow the same trial right periods as far as guaranteed issue. Now, unless a group cancels the whole thing, then of course you would have access. But it's like I tell people, let me go back and show you this really quick, because I had a gentleman that was like, well, I'm just worried that, if I need to go back to my supplement or I want to go back to my supplement and I can't. And I said, okay, well, let's just look at, now I got to find the page that actually has the plans on it here, and I says, okay, well, let's talk about that. Our MSA 100 plan, you're only at risk $2,800. That's $233 a month. I've got people that are paying $300 or $400 a month for their supplements, which is equal to our MSA 200. I'm like, I guess if you really wanted to go back, but you're by the time you're paying your premium, right? The good thing here is if you don't spend it, you keep it. With a supplement, whether you use it or not, you got to spend the premium. And that may be the best, scenario for them. Maybe there's a hospital like Renown Hospital in Reno, Nevada, that is refusing to accept us. By the way, they refuse United Healthcare, Humana, Anthem, you name it. And so maybe it's like, if you really want to go there, you either have to have their product or a supplement. And because they're accepting supplements right now, we'll see if that changes, right? So this is where the Medicare agent sitting at the table with the individual discusses what's in their best interest. And we know that we're not the right fit for everyone. That's okay. Every product has limitations, right?
Okay.
So for an individual who is in medical treatment, they know they're already going to hit their out-of-pocket maximum. This MSA 100 could actually be a better option for them than a traditional MAPD, because the out-of-pocket max is $2,800 versus a $5,000 or whatever on a lot of these other MAPDs.
Yeah, depends, right? Typically when you hit your max out of pocket, it's your Part B drug spend, right? Where you have the co-insurance, right? Because a lot of things are just co-pays. Even your hospital stays for the first 3 to 5 days. But yeah, there is, and remember, we have to watch that too as a carrier, right? If everyone looks at the lowest max out of pocket, right, and we get the sickest of the sick, well, guess what? We've got to make an adjustment and say, hey, we got to bump up the plan here, whatnot. But by and large, MSAs are actuarially favored because people, especially with the HSA market, they like the tax favorability. And remember, we're a self-directed plan. We don't have all the coordinated care stuff. So in some cases with people that are really sick or have some major issues, sometimes those plans, you got your C-SNP plans, you got your D-SNP plans, which those people don't qualify for us anyways. You have to look at the entire picture for a person and say, okay, is this going to be a good experience for you? I think it's going to get better and better with Select Health, but yeah, you're right. It's pretty hard to beat that low max out of pocket.
And you know, one of the things that we discovered with earlier MSAs is that when people get sick, they stop really looking at, you know, IRS 969, IRS 502. They stop following the rules. So it becomes less. The sicker you get, the less viable this plan becomes, just because of the complexity of following the rules and everything. So I think that's something to consider too.
Yeah, and we get, just like any carrier, right? We just need enough, right? We got to grow and spread our risk and continue to offer other benefits. You know, our sole proprietor plans, our small group plan strategy. We have some built-in admin there, you know, to help us with stuff. We've got reinsurance partners, quota share partners, right? We're an insurance carrier, just like the other ones. We take the money from Medicare. We have to give you back some in a deposit, whereas everyone else is using that money for dental and vision and gym memberships, and you're going to see, you know, things are changing, right? So now we do pay commissions. It's per member per month. There's no first year bump. And, you know, I tell people are like, well, you're not paying me as much as if I sold this for the first time, you know, brand new to a new Medicare person. And then I just referenced Blue Cross of Idaho, United Healthcare. We can go down the list now, right? Some carriers don't pay now. Remember the leads that you can generate. We don't apologize for how we structure payments. Get with Stonehill. They'll talk to you about how the breakout is for the per member per month, you know, how the group brokers can work together with the Medicare brokers. But it's pretty cool to get this in front of people and give them it as an option.
Well, thank you, Drew. Thank you very much. Our time is up. We will be posting this out on the Stonehill YouTube channel. And of course, you can always contact us at Stonehill. And if we don't know the answer, we'll contact Drew and find out the answer for you. Right. So thank you very much. And we'll stick around if any of you else have questions, but thank you very much. We're done.